I'm Dan Fitzpatrick at StockMarketMentor.com on November 5th, Tuesday, and I want to look at oil and FedX and UPS. First of all, you look at FedEx, it popped out of this volatility squeeze, nice earnings, and the stocks just kept going. It's starting to drift sideways a bit, but you look at the stochastics indicator here. Everybody says overbought, oversold. No, it's a momentum indicator. Really strong momentum here. It just keeps on going. So you look at UPS, and we can see the same thing. This has gone a little more parabolic again. Very strong upside momentum, which, by the way, you see here before. So, by the way, when stochastics start to roll over, you're likely going to see that with the price, but look how long it took the last time. See, it took a while, so I wouldn't expect UPS to do that. It's probably just going to drift sideways a bit. So, so these are two stocks that you can stay long. I would think the real reason is oil. With oil drifting lower, gas is getting cheaper. Which means that it's cheaper for these companies to ship their stuff. And since supposedly the economy's picking up, that's what everybody thinks, you know, to whatever extent, then demand is expected to stay strong, maybe even increase, because the Fed is not going to be doing anything other than buying bonds in our lifetime. And unless you're like 5 years old listening to this, that's probably the truth. So you've got these stocks that are doing really well. So how do you stay long? What I would suggest doing is use something like, you can use the 10-day moving average as a reference for stops. That works here. Even on UPS, you can use the 8-day moving average. That works. FedEx. That even works here too. But the thing is, if you're just setting a stop, you know, right when this thing tags the fifth, or excuse me, and here the 8-day moving average, that's not going to work out too well, because you will get these things. They will touch them and then continue moving. So what I would suggest doing is looking at these, either the 8 or the 10-day moving average, and when you see the stock close below that moving average for like 2 days in a row, that's when you want to start liquidating your position. But until that time, you want to stay long, because it's, you know, finding these stocks that just move like this is not something that happens every day. So when you get on it, stay on it. And that's what you want to do for these two. Okay, members, over to the strategy session. We got Tesla and a bunch of other stuff too.